Welcome back to our YouTube series. This session will be on RPGT or Real Property Gains Tax. The biggest development that has happened on RPGT is the introduction of self-assessment on 1st January 2025. Now, with the self-assessment, it's a move away from the old system whereby you filed your RPGT returns, the CKHT forms, and then you got an assessment. And thereafter, you had 30 days to pay your tax. Now, the big difference is when you enter the self-assessment system, you will self-assess the tax liability, and you have to be absolutely certain of the acquisition cost, you have to be certain of the disposal cost, you have to be also certain on the timing of the disposal. Whatever you have done and submitted becomes final. That becomes the assessment. The day you submit your return is when it's deemed you to have issued your own self an assessment. And if you wish to appeal, you should be appealing within 30 days of the date from the date that you filed the assessment. I've got Chak here. My first question to him is, what are the principal changes that taxpayers should be aware of with the introduction of the self-assessment system for real property gains tax, Chak?
Thank you, Mr. Tani. So when it comes to self-assessment system, like the name suggests, the main big change is now you as a taxpayer is responsible for computing your own RPGT liability. Previously, you can submit a return. IRB will still have to take a look at what you submitted and they will compute out the RPGT for you. And that is where you either make the payment or you appeal. Now, the responsibility solely lies on you as the taxpayer. The second thing under this regime is you notice that now everything is done online. Everything must be done through e-filing already. There is no more manual submission where you can go to your nearest IRB branch to submit. Whether you are a disposer or acquirer, all the forms that you need to submit for RPGT must be done through their online.
Absolutely mandatory. You cannot use any more paper filing. What are the other important changes, that you need to be aware of with the self-assessment?
The third thing to note that now the payment of your tax liability is going to be very soon, very fast. Previously, under the previous regime is when you submit your return, the IRB may take a few months to compute what is your RPGT payable. And when they issue you that notice of assessment, only then you have 30 days to make the payment. Now, regardless of how long you take to do it, you need to make the RPGT payment within 90 days from the date of the disposal of the property. So that timing is
effectively
fixed.
You have to file your returns.
Within
the acquirer and the disposer must file it within 60 days from the date of the disposal. Then the seller has to actually, if there is tax to be paid, it has to be paid within another 30 days. So totally you have 90 days. And in the event, I think, Chak, in the event they want to correct it, if there is an error, then they have another 6 months. Within 6 months, you can actually make an amendment, but it is only to pay additional taxes. Not if you go the reverse way around. If you go the reverse way around, Chak, then what do you do?
In the event if you realize that you have over-reported your taxes, you can still, it's not lost, you can still make an error or mistake relief application. So it's within 5 years of assessment from the date you submit your return.
But it has to be a genuine error or mistake, because the Inland Revenue has the discretion to accept it or not, and it can be challenged. The other question is, if there is an amendment to be made, is there a penalty? Is there an additional penalty? Because you make an amendment, the tax increases. Is there additional penalty?
Yes, there would be a 10%
penalty. There will be a 10% penalty. And if you also don't file on time, there is a penalty.
So what happens is, if you are subject to RPGT, but if you fail to submit a return within the stipulated deadline, then yes, you can be subjected to a penalty under the RPGT Act. And if you do not get persecuted, because persecution could come with not only fines but also potential jail time. So if you are not persecuted, the IRB's penalties can go as high as 3 times the RPGT payable.
And if you give wrong information, it can go up to 100%. The other point I wanted to make, Chak, is Now, if you have more than one disposal at a point in time where you have a sale and purchase and the 5 or 6 properties being disposed of, there is a slight change now with the new with the new regime. What is the change, with the returns?
So previously, if you in one sale and purchase agreement, if you are selling, let's say 5 or 6 properties, everything can be submitted in one RPGT return to the IRB, and the IRB will just make the calculations accordingly. Now, in the Act, it is clearly stated that each real property is one disposal. So for each disposal, you need to file one return. So even if your sale and purchase agreement has, say, 5 properties, then you need to file 5 RPGT returns for each of those properties.
And the same thing goes to the RPC shares also. It's the same thing that will happen to that. Also, you got to note now with CGT coming into play, Chak, when there is actually, when you're selling shares, if these companies, cooperatives, trusts, and LLPs,
Yes.
they don't, am I correct in assuming that they do not need to actually file RPGT? The matter will be handled under CGT, capital gains tax,
Yes,
isn't it?
because under the Income Tax Act, there is a specific legislation there to state that in the event it is a disposal of shares of unlisted companies incorporated in Malaysia, and if it's also subject to RPGT, CGT will take precedence over the RPGT.
Correct. So those are the kind of issues you need to be aware. Of course, there are many other issues. The only thing I will remind, Chak, you also can, I think, confirm with me, you have to be very, very careful in computing your acquisition cost, your disposal price. You must also know the date of the disposal,
Yes.
because there are issues like conditional contracts and many other issues, which can actually change the dates and the rate of your tax. So you have to be very careful before you do the self-assessment, when you file your returns under the self-assessment regime, because automatically they may take a different position and your tax is due. You have to pay the tax and then appeal and deal with it after paying the tax.
That's
so I
right.
think, Chang, that's about it. Thank you very much, Chang. So thank you very much. Thank you.
Thank you. Have a nice day.